My name is Amy Altholz, and I have the pleasure of serving on the board of Volunteer Lawyers and Accountants for the Arts. And I'm excited to be with you all to share some tips and recommendations as you all are completing the financial elements of your upcoming RAC grant application. We're going to really focus on two main aspects, and these are really the two elements that you are going to need to include with your application. We're going to start by talking about your program budget before we also then move over and talk about the prior year financial statements that you are going to include within that application. But again, we're going to kick it off with your program grant budget. And really this, and we're going to pull up the template in just a minute, but really to kind of set expectations and think about how we're going into that process. This is really the last element of your grant application. You have put a lot of hard work into developing your proposed program, the plan for that program, and really the budget is that last element to really show to RAC as well as other funders what your financial plan is for supporting that proposed program. We want this budget to build confidence in your funders that you have a solid plan that you can execute to fulfill and execute this great program. So we're going to pull up that template so we're looking at this together. But really what we're looking at here is twofold. A budget similar to your statement of activities for your financial statements is really looking at a snapshot of the cost of executing this proposed program relative to the funding that has been committed to finance and really, again, support that program execution. So again, there's really two elements. The top section of this template is, again, really focusing on those expenses. So what money needs to go out the door to execute that program relative to the funding that will support that, both what you already have committed for that program, as well as what's pending or what is in the future additional that will come in from that element. And again, the key when we're looking at this is to make sure that we are reflecting the whole programmatic budget. So the cost of executing the whole program. We know that you are asking RAC to support a piece of that funding, but we want to make sure that this is a really complete picture of the necessary resources for that program. And as we go in and think about putting that budget together, I'm going to try to, it's not normal in the accounting space, going to put a little creativity behind it. And I want you to think about making your budget RAD. So we're going to use this acronym RAD to really help us focus as we go through this. So we're going to start with that R. And my first tip for you all is we really want to make sure this budget is realistic. This is going to be the benchmark that RAC, as well as other donors that are supporting this particular program, are going to measure your success towards. So we want to make sure that this is really going to be something that you all believe is realistic and achievable. I'm an eternal optimist, so it's really hard to kind of pull back from that sometimes, but we don't want to be too optimistic. We want to be realistic. Remember that R. We also don't want to be too aggressive, particularly when we get down to this revenue section and we're talking about, again, planned contributions, other support that's going to come in to support this program. Again, we don't want to just, oh, we need this much, kind of plug that number in there to get a balanced budget. We really want to make sure we're being thoughtful from this. We also want to think about under that guise and under that lens of being realistic, that we're thinking about the various scenarios that could happen. Again, we want to think in that worst case scenario, what does our budget look like? In our best case scenario, what does our budget look like? Again, hopefully we're not in either one of those, but maybe the realistic answer is somewhere in the middle. So again, don't forget that R, realistic. If we move down our acronym to the A in RAD, that's really alignment. We want to make sure, as I open with, this budget is the financial reflection on that grant application that you all just submitted. So we want to make sure that this is consistent with the narrative, with our program goals, with our program timeline, with our expectations. We really want to make sure that this is, again, just that final extension of that application that you are submitting. So again, we really want to look for that alignment and that consistency. And then my last tip in our acronym, realistic, aligned, and the D is going to stand for detailed. What you're seeing here is a pretty summarized Excel spreadsheet that you're going to complete. But to be successful and to have an actual useful tool for the future, there needs to be a lot more information behind this. So I would recommend that you create a separate Excel spreadsheet where you can really, again, as we're thinking about being realistic in alignment with our program purpose and objectives, can create a detailed inventory of, again, what money that we think is going to go out the door related to this program, as well as what are some of those specific funding that we've already achieved or that we have in process for that program. We want that detailed listing. So what I would do if I was in your shoes is I would really go line by line and really, again, think about past experience that you've had, particularly with this program, your understanding of what it takes, asking other people involved in the program for their input, and really write down specifics. Where do we think the money is going to go out the door? In what amount? In what timing? I kind of want a timeline to forecast this out. It's easy to think about those direct costs, those things that we know I'm going to need this particular program supply, I'm going to need to hire this particular person. Those are a little easier when you're doing that initial brainstorming of really the total cost of executing the program. But I would remind you not to forget some of those, what I'm going to call indirect or maybe overhead type costs that also are necessary to execute that program, whether it's particular staff or team members at your organization that are going to be involved. If there's certain utilities, space, general supplies, things that they're going to utilize, don't forget to include those as well. But again, you're going to have this detailed planning this all out. So later when a funder asks you, how did you spend your money relative to that budget, you'll know and remember, again, where those costs and those revenue dollars are coming from. So again, be detailed, look big picture, make sure we're capturing both our direct and kind of our indirect programmatic cost. Make sure you get the input of your entire team. So we're relying on their expertise, their experience, their knowledge of the plan program to make sure this is, again, as realistic and complete as possible. And use then that detailed spreadsheet that you're creating to then summarize that and pull in those totals into this budget template. And once you carry over those totals, really the final check to know if we're in a good shape going forward is going to be, we're going to know the total costs that we have estimated for the whole program. We're going to layer in that funding that we either have committed or in process. And really the goal is that we want to, again, not be too aggressive, but make sure that we have a good plan. If it's going to cost this much money to execute the program, that we have enough funding and that really it's a break even, that revenue equals that expense. And that's really the sign that we kind of the final double check stamp of approval on that budget is to know that we have that bottom line amount that we expect to utilize matches the amount that we are bringing in, again, on a global basis for that program to ensure success. Well, and as we are wrapping up our RAD budget and before we pivot over to our financial statements, one point of clarification that I want to layer in for the non-accountants in the room is when you're looking at your budget template, and again, hopefully a lot of this looks very familiar to what you've seen in the past, some of these expense lines, some of these revenue lines, the area that might look a little unusual is our 2-column heading. So just want to add a little bit of clarity behind that as you go in. So from both a budget perspective, we're going to look for what of our expenditures, so what money that's going to go out the door to support our program purpose is going to be a cash outlay to the organization, and potentially is any of that cost going to be donated to the organization. That is this concept of an in-kind, is really when we're going to utilize non-cash items that are gifted or donated to our organization. So that could be someone donating their time. So perhaps they are donating artistic services or technical production services, or maybe they're actually donating equipment that we're going to use for our particular production, our program, or travel cost, or professional services. don't forget to capture those. So again, talk to that potential donor, get a valuation of what that might cost if we actually had to pay for it, and make sure that we're reflecting that element as part of our overall budget in this column here. The good news with an in-kind expense is that you're always going to have a corresponding in-kind revenue. So whatever this total adds up right here, we want to make sure that matches in our revenue section below by putting that same dollar amount on this line here. That's going to be our in-kinds. So really that's going to be the other side of that to make sure that we have that balanced budget. Is we're going to have our expenses captured above, and then we're going to have our corresponding revenues right here. So just wanted to point that out in case that's a little confusing, not something that you have seen in the past. But hopefully that allows you that knowledge again to turn back and produce that RAD budget. So like I mentioned, really there's going to be two financial elements within your grant application. We're going to have that budget for our program that we just talked about, and we're also going to prepare and present financial statements for your organization on an overall organizational basis for the last year, based on your organization's last fiscal year. So if you're a December year end, that would be December 31st, 2021, or if you're a fiscal year end like a June, that would also be your June 30th, 2021. And really within this financial statements, there's going to be two elements. And I am showing on my screen an example resource. Again, every organization's financials are going to look different. They're going to reflect your particular organization's activity and balances and purpose. But on a high level, you're really going to have two statements. You're going to have this first statement here, which is called a statement of financial position, or sometimes it's referred to as a balance sheet for a nonprofit. So that's statement one, and we're going to talk about both of these in great detail, but we're going to start with statement one, which is your statement of financial position. And you're also going to have a statement of activities, which is sometimes referred to as an income statement for a nonprofit. So those are going to be the two elements that you're going to need to prepare for your organization for your last year. So how do we set you up for success there? And how can we make this reflect your organization in the best light possible? I'm going to cheat a little bit and start with the easier and work our way to the more difficult by starting with this statement of activities, because this is a little easier to conceptually understand. This really mirrors that budget we just spent time talking about. Because your statement of activities, think about it as your organization's factory. This is the money coming in, this revenue section at the top, and then the money going out, the expense section down at the bottom, to really get to, at the end of the day, do we have a net surplus from our operations this year, or do we potentially have a deficit? So really, when I'm preparing this financial statement, I really want to go back and look over that whole year. And again, hopefully this is something that your organization has been tracking throughout the year. Hopefully we're comparing this to an internal budget that we're benchmarking towards. But we really want to look at, again, this concept of revenue. So really, where is all the money coming into our factory? And again, then delineating how is that money going out? And really, again, there's no like rhyme or reason on what level of detail that you need to reflect within this statement. I try to think about my particular organization, what my main activities are, where my main costs are centralized in, and choose the appropriate level of detail. Really think about, how do I tell my story to my potential funders? If they give me money, here's where it's all coming from. And again, here's the main categories that I'm spending those resources on. So I think it's usually easier, again, to start with preparing that factory, preparing that statement of activities to really get that mindset of really what has happened during the last year. Again, money coming in, money going out, subtract revenue less expenses equals that change in net assets. And I think having that understanding helps you pivot then. If we go back a slide and we look at our statement of financial position, or this balance sheet, we're looking at, now we know all the money that came in and out to the organization. Let's see what's remaining at this point in time. So looking at that end of your fiscal year, what resources do I have available for the organization to use in the future? That's really what's captured in this asset section, compared to what obligations, what things do I know that I am locked into that I'm going to have to pay out in the next year, 2 years, 3 years? What are those liabilities that balance those resources I have? And then really over time, what are my net assets? Kind of the remainder. Assets equal your liabilities plus that net asset balance. You want this to be in balance. So how do you actually put this statement together? Again, hopefully this is something that you are tracking throughout the year, but really if you think about those themes, it's really looking back again, we're snapshotting at one point in time, what are we holding and what do we owe? So I recommend looking from your asset perspective, look about any investment, cash, other accounts that you may be holding. What is the balance in those accounts as of the date that we are looking at? Do we have any firm commitments from any of our funders that we have already included within our revenue on our statement of activities? We want to put the receivable side of that. So if we don't have the cash yet, but we expect it in the future and we've already included it within our revenue, we want to capture that in one of these pledges receivable, grants receivable line items. We also want to look if your organization has made any investments in your infrastructure. So are you holding any property, any equipment, anything that you're using now that again, hopefully will still have some future value? Reflect those assets in your total as well. So again, low-hanging fruit of things to make sure we capture: cash, investments, any, again, firm donor or grant commitments, as well as any investment in our infrastructure, any property or equipment that your organization owns. And then think about it from the reverse side. When we think about our liabilities, we want to reflect, again, what commitments do we have outstanding that we want to make sure that the users of the financial statements know that some of these resources that we have available are going to need to go to pay those obligations. So that could be any bills you have any outstanding, any invoices, any credit card bills. If you have, your organization has any payroll liabilities, do we owe anybody any salaries from the previous year? Do we owe any payroll taxes? Do we owe any employee benefits? We want to get those reflected here. Does the organization have any debt that's still outstanding that we need to pay off in the future? That could be a term note that has scheduled maturities. It could be a line of credit we borrowed on. It could even be if you still have a Paycheck Protection Program loan that's outstanding that hasn't been forgiven yet. We really want to make sure we're thinking about and accumulating all of those potential obligations, and again, reflecting as a liability within your financials. So future resources captured in assets, future obligations that we're going to have to pay money out, liabilities, and again, kind of the remainder is then your net assets. And that really, again, assets equals that liabilities plus net assets. So we want to make sure that's again, your final check of approval on this report is making sure that those two are in balance. So now that we've gone through both your program budget as well as the financial statements that you're going to include for your organization for the last year, I just want to leave with you with a few overall tips as you are embarking on this fun financial journey. The first is really just to make sure you're devoting and investing the time. I understand that I am speaking to a lot of non-accountants, and a lot of the words I am using are probably foreign and gibberish to you. So spend the time to really understand, hopefully rewatch this video a few times to make sure you understand what you're presenting, what picture you're sharing for your organization, that you're spending the time necessary to do that to the best and highest of your abilities. This is really your opportunity to give potential funders confidence in your organization, in its financial position. They're going to look at that and then use that to make assessments of whether you are a good investment for their funding to, again, achieve these amazing programmatic initiatives that you would like to embark on. We are all not accountants, so while you're investing that time, please seek help and guidance. This is complex. Look at your board, look at your volunteers, see if any of them have a financial or an accounting background. I know that they would be more than happy to share those resources, those expertise with your organization to, again, help with this endeavor. Or please, I'll put a plug in, please feel free to reach out to Volunteer Lawyers and Accountants for the Arts. We love to help organizations in all manners accounting, so we're happy to be of assistance to help you put this stuff together, or again, set you up for future success in this area. Because really, this is just the baseline. So I would challenge you all to think about the future. And as your organization continues to grow and expand, again, spend the time to make sure you have a great financial infrastructure in place. Everything that we've been showing you thus far can be done in an Excel spreadsheet, but perhaps your organization's at the stage that you can continue to invest. And there's some great, relatively easy to use accounting softwares like QuickBooks Online that organizations can receive fairly economically through certain vendors like TechSoup. That might be a great investment in your future. Make this an aspiration for your organization. If you build it, they will come. So if you build that financial infrastructure, you're able to produce great financial reports, able to give, again, funders confidence in your organization, where you're at and where you want to go in the future, I really think that that can lead to very exciting things. So excited as you continue this journey, and good luck as you put these documents together.